Hi, everybody. Thanks for joining me today. I'm going to talk about one of my favorite real estate stocks, Empire State Realty Trust. Before we get into that, please hit subscribe to my channel if you haven't done so already to keep up with all of my latest investing and personal finance content. And please be sure to check out the link on your screen for a special message from our sponsor, The Motley Fool, where you can get a list of the top 10 stocks to buy right now. So leave me any comments and questions. I want to know what you think about this stock as well. So Empire State Realty Trust, as the name implies, it is a real estate company. It is mostly focused around the New York metropolitan area, and it is primarily an office owner. It owns the iconic Empire State Building. That's just one of the the properties in its portfolio. It also owns about a total of 9.2 million square feet of office space that includes the Empire State Building. It also owns and operates the observatory on top of the Empire State Building that is TripAdvisor's number one tourist attraction in the United States. It operates a lot of retail properties, about 700,000 square feet of retail space. If anyone who's been to New York City knows that the first floor of pretty much every office building is retail space. It also recently got into the multifamily space and bought two Manhattan apartment buildings with a total of 625 units in them. Most of its properties are in Manhattan, but it also has a few in the surrounding areas. So there are a few reasons I like the office approach that Empire State's taking. One, the occupancy remains pretty strong. New York City is returning to the office slowly but surely, and about 88% of its total portfolio is leased right now, including leases that have been signed but not yet moved in. I think the market's really overestimating the remote work trend, especially when it comes to cities like New York. Companies want their employees to be collaborative, to engage. They might not want them back in the office full time. They might give them some sort of hybrid option. That definitely seems to be a clear trend. But I think the office return is going to be, more resilient than expected. We're already seeing a big rebound from the depths of the COVID pandemic, even excluding one-time income. Empire State's core funds from operations, which is essentially their version of earnings, was up 22% year over year in the most recent quarter, including a 7% jump in same-store operating income from its properties. In the retail side of its business, it's having great success with signing leases with both new tenants and expanding existing tenant relationships. During the middle of the pandemic, Starbucks signed a big lease in the Empire State Building to bring one of their flagship roasteries to the space. Panera just signed a new lease with Empire State. A couple of its office tenants either renewed or expanded their leases recently. And you can see on the retail side, especially, this is a great tenant base. These are rock solid companies. They are not going anywhere. The retail side of the portfolio is very strong. Empire State is also trading at a very depressed valuation. Just kind of by my quick back of the napkin, very conservative calculation, they're trading for about a 30% discount to net asset value. They have a lot of financial flexibility right now, more so than many other office REITs. They've spent a total of $256 million on stock buybacks since March of 2020 when they started buying back shares. The management team obviously sees a lot of value in the stock. They have $359 million of cash on their balance sheet and an unused $850 million credit line. Now, bear in mind that the market cap of this entire company is only about $2 billion. So that's a lot of available liquidity to grow, to buy back shares if they continue to trade cheaply, and to just kind of expand the business as they see fit, as they see opportunities in the sector. So the other big thing that I think the market really misses about this stock is the observatory. I mentioned they own and operate the observatory on the top of the Empire State Building right before COVID. They couldn't have timed this any worse. They completed a $165 million redevelopment of the observatory. It looks absolutely beautiful. You can see the photo of the higher of the two observation decks on your screen right now. Observatory traffic has been steadily coming back since the initial COVID lockdowns. And what's even more important, the company's doing a much better job of monetizing their visits. They provide private tours, they provide upsell and experiences that people are paying more per capita. Observatory traffic in the second quarter of 2022 was about just under 60% of comparable 2019 levels. So about three-fifths of the amount of people as we saw before the pandemic. However, off of that customer base, revenue has rebounded to 80% of pre-COVID levels. That just kind of shows you the increased monetization. They essentially think that the observatory will be back to normal by 2023 in terms of traffic. And this is a cash machine business. It's really tough to overstate what a cash machine this is and what a unique aspect of this real estate company it is compared to other office REITs. The observatory made up 21% of its net operating income in the most recent quarter, and that's at the depressed traffic levels. And that's from just about 2 or 3% of the total square footage of the company. So, off a tiny bit of their square foot, they're generating a ton of high margin revenue. Um, I mentioned that the stock trades for a pretty big discount to its net asset value. Its dividend hasn't really come back to pre COVID levels. It yields right around 2% right now, but it will over time. Right now, buybacks are the priority because management thinks the stock is cheap. So, I can't really blame them for that. The biggest risk here is that the office market doesn't rebound as expected. If more companies than expected tell their workers they can work from home indefinitely and end up giving up a lot of office space as a result, that could be a negative catalyst. I feel like the iconic nature of Empire State's assets, especially the Empire State Building, its great tenant base, and it kind of fits in the middle of the expensive Class A office space and the kind of lower frills Class B space while still providing an address that everyone wants. So it really fills a nice niche in the real estate in the office real estate space. I think it's going to do just fine over time. This is not the first time the New York office space market has been counted out, and it won't be the last, but I think it will come out just fine from the post-pandemic kind of return to office. I love that observatory business. Historically, it's been a mistake to bet against New York City, and I'm not doing that now. At these levels, Empire State Realty Trust is one of my favorite risk reward opportunities in the market. These are iconic assets, a profitable business that's not going anywhere, and it can be a great addition to any type of long term focused portfolio. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by the Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.